0.25%. Amit Gupta is Senior Vice President and Fund Manager at ICICI Securities PMS. He's joining us now. Amit, good to have you with us here. Thanks very much. Let's just get the broad direction out of the way first. Do you think, we've kind of, after about a month and a half, 2 month odd consolidation, slight 3.5% fall, we've started something fresh? Because there is elections also, right, which will kick off. Next week, maybe we will get the manifesto of the parties. Most interesting, of course, markets will be most interested to see what the BJP says and how detailed it is on the economy side, etc. So lots of triggers in that sense. So just wanted your thoughts. What's the roadmap near term, next 1.5, 2 months?
So I think near term, the way the market is, behaving, because a lot of large caps still, I think the juice is there. And that is the reason that market has remained resilient. We have seen some intermediate corrections of 400, 500 points, but that has actually been taken care of. If you see, for example, the energy space, the cement space, the metals, so we feel that they have been consolidating for a while and now they are coming out. And that is the reason actually I think overall Nifty is possibly can remain positive towards not only elections, but also towards budget. And I think in the Indian markets, because intermediate corrections are going to be seen in between. And we have seen from 2022 onwards that Indian markets have a tendency of moving towards 5-year average valuations. And if you see in 2022, we had declined, from almost 15,000 to 18,000 to 15,000. Then 2023 also the decline happened towards the 5-year average of 18,500 something. This time this 5-year average is placed at 20,000. And that is where I think from the investment perspective, if we have to look beyond, I think this 2024 will have a base around 2,000 levels. Because if you see the EPS of financial year 25, I'm assuming around 1100. People are also assuming around 1150. So on 1100, I think 20,000 will give you a price to earning of 18 times, close to 18 times, which becomes a 5-year average. And that is where if you assume this, then you are ready for some corrections, and then you can place your cards from the large caps to mid cap space and make a good portfolio for yourself. And I think that is also what we are doing.
Okay, all right. Hi, Amit. Good afternoon and good to see you in. Amit, since you briefly mentioned cement, I wanted your view on the stocks. Just to tell our viewers out there, there is a push for a price increase. The last quarter, the pricing was very, very weak. And at the start of any fiscal, we normally see that they try to push through a price increase. However, how much of this price increase is accepted is going to be more crucial. So that's the important point in there. Ahead of an election, and demand needs to be strong enough. Tell us your view, Amit, on the cement companies, and they've underperformed in the last 45 days or so because of this weak pricing. How would you approach them?
And in fact, cement had underperformed, previously also in the entire year because they were not able to increase the prices, as you rightly said. And that is the reason your EBITDA per ton also was not coming up. And we saw that, some of the bigger participants, they have kept the prices lower, and that was also eating away the margins actually of these companies. Now we have seen that there are some efforts, possibly after elections, you may see some reversal in the prices in the cement pack. But overall, I think the raw material cost is equally important. Now, recently, we have seen that the crude prices have moved higher to $88 per barrel. I think it looks like it has moved up because of the global growth, revision. But overall, it seems that when UK is going into some recession, and we have seen some recession in Japan also, it is possible the demand factor globally may not be very positive. And when I look at the domestic commodities like cement, I think it is possible that overall you will see that the raw material cost may not be very high for these companies, and that is why the margin can remain in an expansion mode going forward. So these companies are on a good wicket now. They have already spent a lot of time. Volume expansion is the game now, and we have seen that once the output price little bit starts going higher and remains sustainable, because we have seen before also they have rolled back some of the prices. If that does not happen, you will see a more sustainable move in the cement going forward. So I think the time has come now to start looking at some of the stocks in the cement after the long consolidation.
Okay, that's cement. Amit, hi, good afternoon. Surabhi here. So, apparel and retailing were never sectors that were seen as big wealth creators or, major sort of drivers in the market. But then a stock called Trent came along and everything changed. Now, we're seeing what the Aditya Birla Group is doing with its fashion and retailing, apparel retailing business. Just your thoughts. I know you can't get into too much of specific stocks, but still, just what is the approach that you've taken to this space? And do you think Trent was a one of its kind of a phenomena? Or do you think this sector has the potential to re-rate?
So I think one is the brand value. So if you can, because the brand equity, once somebody has made, and then the next question is how you are looking at the cash flows, because it is also possible your input cost is very high. The initial cost is very high. So we saw it in the case of Aditya Birla, before that the other retail companies were participating, but this company was unable to participate actually that time. I think you reach a stage when the discretionary expenditure starts increasing. We have seen currently that the number of rich people actually are increasing, the number of billionaires increasing, income levels are going higher, lifestyle of the people is changing. So there is an upper layer which is ready to spend. I'm not talking about the lower the pyramid right now. So this upper layer beneficiaries are going to be, do much better going ahead. So we saw it in Trend. So in Trend, West Side actually was doing better. In fact, in the upper to middle, there is one segment where if you can provide the lifestyle, at a much reasonable rate, then there are takers in the market, and that is what Zudio did in the case of Trend. So I think Aditya Birla also, Pantaloon and all. Initially, when they took it actually from Big Bazaar, that was the cash cow actually for them, and I think they can do something now. They have already worked upon this. It is possible that some of the retail companies can participate in the coming days. In fact, we have seen some consumer companies recently have started coming up, and I think very selectively we need to go. In fact, we are focusing more on the air conditioning players right now, because going forward in the summer, you will see, more demand coming up for air conditioners. It's a very low penetration in India right now. If you look at the number of ACs demand in a year in India, it is around 90 lakhs. If you look at in China, it is around 8 crores in a year. So on the same population base, I think there is a big difference for ACs, and that is where I think that segment can also come up.
But, Amit, just to take you up on that, while I completely understand the rationale for looking at ACs, but isn't that, a very seasonal sort of phenomena? Because I remember when we spoke to Mr. Tyagarajan of Blue Star a couple of, weeks and months back, he was speaking about serious competitive intensity in the market. So is this sort of a seasonal trend and maybe you trade it smartly? Or do you see some of these consumer durable companies, AC companies, as also sort of, critical holdings that should be there in the portfolio?
No, you rightly said. So competitive intensity is definitely there. So we have seen the Japanese players, they are dominating this market in the OEM space. And that is where Voltas had lost the market share from 25% to almost 19%. But I think another way out is when there is a bigger scope going forward and you have dealt with your raw material problem, because we saw before the copper prices were also going higher. So after gold, I think copper is the another commodity which has gone higher actually. So they were not able to increase prices because of this. So their margins were also coming under pressure. That problem we saw in the case of Havells when Lloyd was there. And now I think one way, so yes, one thing is there is a bigger room now, as I said, more ACs can be sold, and there is an industrial segment also. When you do a lot of capex, there is more demand actually from the industrial side also can come up. Other thing is to play this segment, you can look at the vendor companies also. So for example, those companies who provide refrigerant gases. So these gases prices were lower because of a lot of destocking from China. But we have seen the case that there is some bottoming coming out for these prices. And that is where I think some of the vendor companies can start participating from this front. SRF is one good example from the vendor segment.
Okay, all right. Good to have you, Amit. Thanks a lot for joining in and giving us all of those details. For the time being, though, we'll slip into the short break with news that the Nifty actions recovered quite a bit from the day's low. The mid-caps continue to remain on fire. On the other side, Nimesh will be standing by to fill us in with D-Street chatter. We'll also get you some technical calls.